Should you buy Microsoft MSFT stock? Is it a good value investment? When you compare MSFT stock, its valuation right now compared to alternative benchmark investments, Microsoft is anything but a buy. Looking at that, today's activity, there's a pretty decent sell-off. The market, the broader stock market, appears to be getting ahead of itself. And we're seeing some adjustments this week. We may see very important economic data coming out this week that would really drive the future of the stock market as well as the bond market, which is really the primary focus. This could shift MSFT stock much lower. We're down a bit today, could go much lower. Let's take a look at the valuation of MSFT stock versus the benchmark 10-year Treasury yield. Let's jump in. If you are just joining me for the first time, thanks so much. What I do is I break down the economy and I show how that applies to the stock market. And in this case, I'm going right at Microsoft based on economic analysis of what the economy is doing and alternative investments. Let's first start off with the 10-year Treasury yield. This is the benchmark investment rate. You start with where's the benchmark rate. Right now, about 4.3%. You could invest your money, give it to the United States federal government, and gain about 4.3% over the course of the next several years, 10 in that case. You could invest in that knowing that eventually interest rates are likely to come down. Now, there's an inverse relationship between yield and price. Yield is pretty high right now, although nowhere near its high point of all time. We just recently in October saw 5%. It's down a little bit. But what happens is price goes up when yield comes down. So at 4.3%, most of us feel as if the interest rates will come lower at some point, maybe as early as next year. That would mean price would go up. So from a risk perspective, number one, it's the United States federal government. Politics aside, you're going to get your money back. And you're going to get 4.3%. And interest rates might go lower, which would drive price upward. But if the Federal Reserve had to push interest rates up even further, you locked in 4.3%. That's your benchmark. Now let's take a look at Microsoft MSFT stock, which is selling off today. And what happened is interest rates are starting to move back upward. The market feels as if things got ahead of themselves, and so bond yields are heading a little bit higher. The stock market is selling off kind of sharply. Here's a look at quarterly revenue for Microsoft. Printed a record quarter for this Q1 2024. Projected revenue $242 billion. Projections are that if you look at this chart, this is from a value investment, breaking this down, this is a solid company. I love Microsoft. I don't like the price, is my basic bullet point there. They have continually increasing revenue. Given that, should you have a reasonable question of what can we expect from Microsoft? Over the past 6 years here, the 6 bar charts you can see, they've increased revenue year after year after year after year. We can reasonably assume they will continue to do so. Gross margin, 71.16%. That's kind of a record for them in this period of time. Operating margins, 47.59%. Net margins, nearly 40%. So all the money they're bringing in on a net basis, you're keeping 40 cents on every dollar. That's pretty solid. The S&P 500, by comparison, about 8.25%. So Microsoft clearly wins in that category. Earnings per share. This is something else. Not only revenues, you want to know if they're going to continue to move upward, what does Microsoft do and how does that translate to MSFT stock with regard to earnings per share? Projected earnings per share is where we look from there. And as you can see, expectations are that we continue to $11.23 for 24 and then $12.83 for 25. We've had continually increasing revenue all the way back to 2018. There was a dip there from 17. So Price to earnings ratio, this is another one. All right, so forward PEs, right now this is the current PE. Forward PEs are what you really want to kind of consider. 30.6 is a bit rich, and we'll break that down. Price right now for MSFT stock, $3.65. 2024 earnings per share, $11.23. Divide 11.23 over 365, you get 3.073%. It was just at 385 a couple days ago. That was 2.85% yield. So those individuals who bought then bought with a very small amount of yield, given what they would earn over the course of 2024. Their alternative investment, the benchmark, the one you compare everything to, the 10-year Treasury, 4.295% today. So at 3%, you could get about 4.25% more out of the U.S. Treasury. We're looking at an economy that the Federal Reserve is forcibly trying to contract, if somewhat, which would mean smaller expenditures by the people in the economy, which translates into less revenue to businesses, which translates into less profits. This is the risk that you get with Microsoft at this point. The Federal Reserve is trying to slow the economy down. They're trying to move unemployment up. So there's risk there getting involved. So those that bought in at 385 at that peak with such a small yield are kind of paying for it today. Given that, when you look at the benchmark yield, it's a much safer, dare I use that word, less risk environment investment, given the risk potential moving forward. If the economy slows down, Microsoft's revenue, they probably won't hit those numbers. There will be big shifts. Analysts will be sending out messages left and right. MSFT stock goes down. We may see higher interest rates out of the Federal Reserve. So your 4.295% yield you'd grab today wouldn't be the best you could grab, but eventually interest rates would need to come downward, and therefore price would go up with your 10-year yield Treasury price. You'd make money there. So your downside risk is minimal comparatively when you consider what's going to happen with the economy. Taking a big picture look at Microsoft, here's a weekly chart on MSFT stock. We're pretty close to all-time highs with these guys over the past several years. There's not much juice in the tank is the way I look at it. I like Microsoft a lot. Continually increasing revenues, continually increasing earnings per share. The yield, I'd choose the 10-year all day long. Once MSFT stock drops to a more rational yield, where as an investor I could buy into MSFT stock at a price that gave me a premium over the benchmark, I'd buy that all day long. Make sure to hit the like and follow button if this is the kind of content you're looking for. We'll see you in the next video.